In this video, we will analyze whether the decline is over for Xcn coin. Please watch to the end so as not to miss anything. Looking at the chart, we can see that there is a falling trend line coming from the top that is suppressing the price. This trend line has limited the price's upward movements many times before, causing selling pressure at every contact. But when we look at the recent price action, it is noticeable that the price has broken this falling trend line to the upside. This breakout may indicate that a significant change is taking place in the market and sellers are starting to weaken. Because while this trend line was previously working as a strong resistance, the price has now moved above this level and is testing it as a new support. This trend shows us that the downtrend is over and the uptrend is starting, but we need to look at other metrics. Stay tuned. Looking carefully at the chart, we see that there is a significant bullish order block just below the price. Right now, the position of the price is quite critical, because the price has approached this bullish order block and is very close to touching it. Looking at the previous price action, we can see that there have been several strong buying reactions from this area. This suggests that this area is an important line of defense for buyers. If the price gets a strong reaction again when it reaches this bullish order block, it may indicate that the buyers are still active and trying to protect this level, and there is a bearish order block prominently positioned in the upper zone. This area has worked as a strong point of resistance in the past on the upside movements of the price, and there have usually been pullbacks when the price reaches this level. We can observe that several times before, when the price approached this zone, the selling pressure increased and the price moved downwards. This zone is the first target of the price. This bearish order block can stop the price. It is hard to break it the first time, but it can break it after a few attempts. When we evaluate the price movements according to the Elliott wave theory, we see that the first wave has been completed in the market and the second wave is in the process of formation. The first wave is generally considered to be the beginning of a bullish trend and indicates increased investor interest in the market. The second wave, which follows the first wave, is a correction movement and refers to a certain amount of price retracement. At this stage, the price usually retraces to one of the Fibonacci retracement levels and reacts from strong support levels, setting the stage for the third wave. Since the second wave is a correction wave, it is often observed as a period of increased panic selling, when the market is more unstable. The third wave is the longest wave. A very fast and sudden rise comes, and that is the third wave. Looking at the chart, we can see that an ascending triangle pattern has formed. Ascending triangles are generally regarded as a bullish continuation pattern and create an expectation of an upside breakout in the price. In this pattern, the lower trend line is trending upwards, while the upper trend line is usually located at a horizontal resistance level. This structure indicates that the price is stuck in a narrowing range and is preparing to make an upside breakout. The price made a breakout past the upper resistance level of the triangle, but failed to sustain it. After the breakout, buyers were not strong enough, and sellers dominated. As a result, the price retraced back into the triangle and continues to move inside the pattern. I don't think it's negative that it entered the triangle because it was supposed to retest the downtrend. Looking at the chart in detail, we can see that price action is moving in a small-scale ascending channel pattern. Ascending channels are usually among the technical structures that show that the price is gradually moving upwards and the trend is upwards. Such patterns indicate that the price is moving between certain support and resistance levels and is generally bullish. At the moment, the price failed to attract enough buyer interest after reaching the upper band of the ascending channel and started to retreat, failing to maintain its upward movement. Due to the selling pressure after touching the upper band, the price exhibited a downward movement and sagged below the middle band of the channel, and the price may touch the lower band and try to break the middle band upwards again. When we look at the Bollinger Band in detail, we can see that the price has moved below the middle band. If the price is currently below the middle band, it may indicate that buyers are not strong enough and selling pressure is increasing. If the price continues to move towards the lower band, the market may be considered to be approaching oversold territory at this point. Bollinger Bands can often signal a reversal, meaning that once the price reaches the lower band, there is a good chance that it will rebound and head back towards the middle band. We have to let it go down to the lower band, and there is a bull order block in the same area. It will not go down all at once. The price will come up a little bit above the lower band, so that it will touch the lower band and go to try the middle band. When we look at the MACD indicator, we see that there is a crossover from the top to the bottom. This type of crossover usually signals that momentum is weakening and that the price could be on a bearish move. However, there is one important point to note. The MACD line is still holding above the 0 point and has not yet moved below it. The fact that the MACD has not broken below 0 suggests that the bearish momentum has not fully gained strength and there is still a chance of a rebound. If the MACD line does not lose strength at this level and shows an upward trend again, it is possible that a new wave of recovery may begin in the market. In particular, an upward crossover of the MACD line and the signal line can be considered as a bullish signal. And the fact that it has now broken the downtrend gives us the possibility that the MACD will make another attack. When we look at the RSI indicator, we can see that there is a clear uptrend. Currently, the RSI has touched exactly above this uptrend. This means that an important support level has been tested, and the price has the potential to react from this level. If the RSI gets a positive reaction from this uptrend line and starts to move upwards again, the chances are that the price may continue its upward movement as well. In this case, the price can be expected to continue an uptrend and reach higher levels. As long as the RSI does not break this uptrend, it will continue to rise along with the price. When we look at the vortex indicator, we see that it is used to determine both the momentum of the price and the possible trend direction. The vortex indicator usually contains two lines, the blue line and the red line. The blue line is considered an indicator of bullishness and buying pressure, while the red line is considered an indicator of bearishness and selling pressure. Currently, the red line on the vortex indicator is trying to rise towards the top. This may indicate that the bearish pressure on the price is increasing and the selling momentum is strengthening. So, when the red line crosses the blue line from top to bottom, it could be a sign of an overall downtrend. Such an intersection signals a situation where the selling pressure intensifies and the probability of a downward move in the price increases. However, it is important to note that this move is not yet complete, and it remains to be seen whether the red line will cross the blue line completely. If the red line crosses the blue line completely from top to bottom, this could be a harbinger of a stronger downtrend. But even if the red goes up, I think it won't stay up for long because the price has broken the downtrend and is retesting, so the red goes up. After the retest is over, when the price starts to rise, the red will go down again and the blue will go up again. That's my prediction. The 200 EMA is an important indicator that is often used to identify long-term trends in the market. This moving average helps to determine the general direction of the price, and many traders make a decision to buy or sell based on whether the price can cross this level. Currently, the price last tried to approach the 200 EMA but failed to break above this level. This suggests that no matter how hard the price struggles to cross the 200 EMA, this level acts as a strong resistance. A close above the 200 EMA is usually a signal that a longer-term uptrend could begin. However, a failure of the price to cross this level signals that selling pressure is still present, and the current price action may continue downwards. Such situations can be critical moments to see if the price can stay above the 200 EMA. If the price approaches and breaks above this level again, and successfully retests it, then it is ready to move higher. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.